Hi everybody, I'm Tom Dorsey, President of Dorsey, Wright Associates. It's the 8th of February 2013. And some people mention that they hear some things in the background when we do these DWA Minutes. That's okay because these are actual live tapes that we're doing right here, and everything is happening in the office. So if you hear noise, people are on the phone and trading and talking with other advisors. Interesting enough, it's the year of the snake for the Chinese. That's the symbol for this coming year. It'll be the 10th of February when that actually begins. It means steady progress and attention to detail. This is actually the third take we've done on this tape, so we're talking about steady progress. We haven't been making that so far. But at any rate, the reason I wanted to talk to you today was that Goldman Sachs came out with 10 stocks that they think are going to be great plays in the future. Now, these are fundamental stocks. These are fundamental decisions. They have nothing to do with technical. So we thought we'd play the piano with both hands. Let's look at each one of those 10 stocks and see what they look technically. Some are good, some are bad. So you've got to be able to do that. Look at both sides of the equation. First one is Apple Computer. AAPL is the symbol. It's ranked number 2 for us on our ranking system, either from 0 to 5 technical attributes. It only has 2. It's recently dropped down from 3 to 2. When a technical attributes goes from 3 to 2, 2 is not enough for us to hold in the portfolio. Interesting enough, it was sold out of our PDP, which is our ETF. We held it for 300 and some points, and then eventually sold out many, many points ago. It'll probably go back into the system, there's no question about it. Apple's S-curve on its GDP is at an extremely low level, between 6.5% to 11%. That means long-term, there is plenty of room for the upside. That's a long-term picture, but let's wait until we get the score back above 3. That's the point you want to go back into Apple. Goodyear Tire, symbol GT, has 3 attributes, which is the minimum for us to be acceptable. The chart looks okay, but I would prefer to buy it on a pullback to about 13. Let the stock exhale, pull back, and we'd be a buyer there. Prudential, PRU symbol, Prudential Financial. I would buy at 60 on the breakout. The stock has come up 4 times to a particular level, 59, and each time it comes there, supply comes in and forces it down. So we don't know why the supply is there, but we know that 4 times straight so far, it has been there. If it hits 60, that supply is going to be dried up, and that's the point at which I'd want to buy Prudential. Applied Material, AMAT, has 0 technical attributes. Don't like the stock. I've known this stock for 37 years. This has been around for a long, long time. I know it's fundamentally sound, but it's not technically ready yet. Joy Global. Joy Global is ranked number 1, and it's beginning to rise. I like the pullback. It's been very, very volatile here, but the pullback, or like in easier terms to think about, the exhale, makes the stock an interesting buy at this point. I might buy part of my position and begin to average your position in later. I still would prefer to see this a 3, but I think you can go ahead and begin to move into it now. Scale in. Ford Motor Company is next. Ford is one of the car companies that did not take a bailout. They hung in there, and they did very well. They have done very well fundamentally. However, it still has a 2 ranking. That's too low for us to be in it. I don't like the chart pattern on it. I would avoid Ford for now. Discover, DFS, is a 4 ranking, has just declined from a 5 to a 4. It's moved from 4 3/4 up to 38. Still has an okay chart pattern. They like it fundamentally. I can make a case for it technically. I'm going to say okay to buy. Williams Companies, which is in the gas business. I like to trade gas every now and then because gas is so low. I like to trade the futures, and that's a dangerous game. But an easier game to play would be through Williams Company, which is a gas company. It's a ranked number 5 for us. Looks fantastic. I would buy the stock, no problems asked. Next would be Southwest Energy, which is also in the gas company. I'd say it's okay to buy. It's a rank 3 out of 5, which means it's okay as far as technical attributes are concerned. So we'd be a buyer of that stock there. And lastly, Natural Oil Well. That symbol is NOV, and it's a 1 rank. It's just at the 1 level. It just doesn't have enough relative strength for us to buy it. I would say I would avoid that stock. Doesn't mean that some of these stocks that we avoid right now can't become good stocks. That's why it's the year of the snake says pay attention. You got to keep your eyes open. Pay attention. That's what you've got to do this year. Things aren't going to be easy, but if you pay attention, you'll be in the right place at the right time. That's all we have this week. We'll talk to you next week.